Hey, everybody. Welcome. We'll give people a few seconds or a minute or so to dial in or connect in. I'm really excited to be sharing a webinar today with you about the limited partner perspective, because a lot of times at VC Lab and the Founder Institute, we'll do venture capitalists talking about the venture capital experience or expectations. But very rarely do we have webinars with a limited partner talking about their experience, their interests, their desires, needs, etc. And we have an amazing guest to do that with today, Court, who is, I guess, the founder of DocuSign and former CEO of DocuSign. Is that an accurate description?
I would say co-founder. I founded it with a partner, but we split the responsibilities. I ended up as the CEO and he ended up running product.
That's awesome. Exactly. And so, and Court's gone on to do a lot of interesting things afterwards, including being a limited partner. And I discovered yesterday when we invited some people to the webinar that you're a limited partner and some graduates of VC Lab. So that's like great. So even better. And they're like, what a fortuitous discovery right before this event. So we're already at 39 people. So let me give some housekeeping rules very quickly. If you put something in the chat, I probably won't see it. But what we do is we use the Q&A. So you see at the bottom of your screen, you have all these controls. There's a Q&A area. Post a question in Q&A. You can vote on other people's questions. And then what we can do is we'll do our best to get through all the questions and with the top voted questions first. Okay, so post your questions in Q&A. All right, Court, I gave a brief introduction. We got some critical mass here in the webinar now. Do you want to quickly introduce yourself? And then I'll start with some questions that I know everyone would be interested in hearing.
Sure, and I think the brief background on me, I'm an engineer who went on to start 5 different tech companies. DocuSign was one of them. I had several successes, one giant one and one absolute flameout. I have spent most of my career trying to figure out how to optimize building companies. And now in sort of my post-company building career, I'm doing the same thing, trying to figure out how to optimize investing. And so my involvement with VC Lab and Adeo was right from the jump. And I'm currently an LP. I just counted in 15 funds across the world, and probably 60 or 70 companies individually. So as an individual investor and advisor board member. So bring it on.
Perfect background. Okay, let's jump with. I want to sort of go from why you should be an LP. We'll start out there to what it's like being an LP but let's start with why one should consider being a limited partner. So as you mentioned, you went from hacking the, and company formation to, thinking about the investing side. Why should someone be an LP? Like, what are your reasons for doing it? And maybe we can extract some lessons for others out there that are thinking of being a limited partner.
Well, again, I think everyone's motivation is slightly different. Some people talk about things like asset allocation, which is very numerically driven. Mine is much more causal in that as an entrepreneur, as a founder myself of multiple ventures, and I'll mention that I'm geographically located in Seattle, Washington. One of my core values is giving back to the community at large. And in this case, it started for me as giving back to the community of Seattle specifically, and to the venture community that supported me on my journey, which is, I believe that if you are successful, you need to turn around and reinvest in the next phases. And so both as an investor in funds and an investor in companies, a huge motivation for me is trying to, grow the ecosystem for everyone. And specifically, my attachment to VC Lab is because this is, in fact, growing the VC capacity across the world, which is, to me, a very, very important topic.
That's awesome. So we see that a lot of LPs are coming into the venture asset class because of exactly the things you were saying, that they wanted to give back, and that they also have some sort of mission, right? Some sort of greater purpose. So beyond just giving back to Seattle, are there other things that you're passionate about that as a limited partner, that if a fund came along, you'd say, oh, that's an area of interest of mine, so I would love to invest in a fund that's backing companies in that sector?
Absolutely. Again, I think very personal in terms of what gets people floating. I mean, my background is mostly B2B enterprise software. That's where I've certainly made most of my mark, but I've done things from renewable energy to consumer facing stuff. So my current dominant focus from an investor's perspective is looking for funds and companies that are what I call creating a better society for the future, right? So they're looking for things, whether that's climate, personnel, efficiencies, market options that are at some level going to make society a better place 10, 20 years from now, if they're successful. That's a prime filter for me, honestly. And I think that helps me stay focused because I think there's so many great opportunities out there. But and then I'm doing it on a global basis, right? I'm not specifically focused on US investments. I've got investments with funds and companies all over the world. And I think it's important to recognize that startups and good investors and good opportunities are created everywhere, and they all need support.
So we've talked a little bit about the qualitative things, right? You're giving back, passionate about making the world better. What are some of the quantitative reasons that you think make sense to invest in venture funds? Because again, we have lots of LPs in our community, right, and some of them hesitate. And what are some quantitative arguments that you would make?
Well, if you look at the asset class of private equity, and particularly, subsegment that down into startups, because private equity is obviously a big category. As a whole, you're looking across the ecosystem and saying, hey, where is this performing relative to other assets I'm going to have in my portfolio? I've got many options to put capital to work. And as a class, even though this one is riskier at some level, by some measures, I wouldn't say it's always the same measure. It typically it performs equally or better than what otherwise would classify as less risky. And to me, it's a combination of asset allocation performance. So I have a, allocation to this, but also generally, when you find managers who are outperforming, they are radically outperforming. And so you tend to pile up on those, and that's fun to watch. It's fun to help and fun to watch.
Okay, let's that's a great segue into now you're looking, but before I go, and it's such a great segue, but I do have a question because you brought up the allocation. Do you have a rough, are you over allocated to venture as per, traditional recommendations of it being a small percentage of your wealth, out of curiosity, before we make the jump?
Well, again, mine tends to be, and I don't have a specific number. I'm not aiming for a target, because this is for me, a community for which I'm very comfortable, right? So as an asset class, I walk into this with my eyes wide open and I understand the metrics and the value. That being said, so my portfolio might to some feel overweight. It's probably more like 25% allocation in this class, but I'm not looking at the percentage. If I have a huge win in the portfolio, I'm not I'm going to slow down my allocation to this asset class. I'm moving that around, and I'm constantly looking at sort of where my I think of it as my currently illiquid assets, right? So, this is a currently illiquid, but I have a bet that they're going to become liquid at some point, or some portion of them will. So, I'm not strict about that, to be honest.
That's great. And, one of the things we're seeing is that the asset class is performing so well compared to other asset classes. many of which are performing well also. But this venture has been performing better. That the percentage allocation, because if you put like $10 million in a fund and all of a sudden it's worth 50, let's say, your allocation as a percentage of your wealth goes up. But so we're seeing a bit of that happen, which is very interesting. Okay, so let's go to the segue now.
Sure.
And you brought up, looking at new managers, and it's very exciting to be side by side with them in the trenches building their fund, and questions are now streaming in. So this is great for everyone there. Get your questions in Q&A, upvote them, and we'll try and get as many of them answered as possible. I'm going to cover some basic things with Court first. So so there's new managers, right? There's emerging managers, which are like been new for a little while and maybe on their second or third fund. Can you talk to me about like any experience, good, bad, or other experiences you've had with new or emerging managers, and your thoughts on, because a lot of people are like, I will not deal with new managers. And I know you've backed at least one. And so I'd love to
quite a number, actually. So, I call them pickers, right? So as managers, you guys are pickers, right? You're out there just sorting through the piles and piles of our opportunities that exist, and you all are looking for a way to demonstrate that you're good pickers, right? Because you're not going to win on all, not even most of your picks, right? Statistically speaking, and that's okay, right? The real issue, or the real thing that I look for, is even in a new manager, somebody that's never done it before, is kind of what is their history with picking people, right? Picking people and judging how to build good teams. Because if you've come out of an organization or a professional career where you can demonstrate, to me at least, that you have the ability to find, recruit, hire, train, develop, and allow to succeed groups at any level, at a significant level, that gives me a reasonable expectation. Because honestly, startups, particularly in most of the classes that you all are looking at, you're picking the people. The ideas are a dime a dozen. The old saw of, you can take a great company and run it into the ground with mediocre people, a great idea. But if you have a mediocre idea and you put great people around it, you're more than likely going to have a star on your hands. So I'm first and foremost looking at that as a judgment. And frankly, that's a pretty decent pattern to match, because I've definitely looked at people. I'm like, yeah, not so sure that person's going to be a good picker. Time will tell. I don't know whether my judgment is any better than anybody else's, or I think that person's got a really strong case to be made. They've demonstrated good team development. I'm willing to give them a shot.
That's awesome. So team and people's one. Are there other, because there's a bunch of questions about that, like what are the top three? So team and people is definitely a big one. Picking is another related to that. Any others?
Well, I think you asked the sector question. Where are the are we sector aligned? I tend to know the sectors that I'm most comfortable in and can make a reasonable assessment, and those which I don't feel as confident in. So I tend to stick to my knitting, in the sense that I'll invest with folks that are going to build funds in areas that I probably have a deeper level of understanding. So I have a way to judge whether or not they have done a good job of picking, right?
So the focus thesis that you feel personally interested and aligned with, right? Versus like a generalist, right? Okay. We're a fan.
And I'll give some very specific, like I've never been in the healthcare space. There are some terrific pickers in the healthcare space. They are successful as hell at there, but because it's not in my experience base, it's hard for me to judge whether they're good or not. And so I tend to remain on the sidelines. That's fine. There are lots of people who come from that space. Flip that around and say, enterprise software, consumer facing stuff, I know that space quite well. I am very comfortable there. Even climate and sort of green tech, even fintech, I'm comfortable with. So there's a lot of spaces I'm okay with, just there are a few that I know I need to probably stay away from.
Okay, so sector alignment is a third. Anything else that, when you're looking at maybe terms or economics, obviously, but I'm leading in case there's anything else, because there are a lot of questions on this.
I have one other strong request that I make of all fund managers. And this has to do with, I want to support the fund. I want to be there and put a big chunk of money to work. But I also am very specific that when I make that investment, I also want co-investment rights when those opportunities present themselves, because I'm often able to present myself in a way that is like another venture fund in terms of size of check but I personally am asking for no fees or carry on those co-investments. Like I'm in the fund already, and if the fund is looking for other people to jump in and add more money to the company, it's my expectation that I'm acting more like another venture investor than a adjunct to that fund in that context. So that's
so would you go into their SPV? Okay, so you're just saying I just want the right if they can. Okay,
if there's room and around and you're looking for other people to fill it up, because the fund is already topped up its allocation or its ability to put money to work, I'm your guy, but I don't want to pay fees for that.
So you don't want it in an SPV structure, you'd go direct. Do you have your own little fund to do that with, or do you have, or an entity, or?
It's not an entity, it's just my family fund, yeah.
Yeah. Okay. All right. Yeah. Oh, that's awesome. I haven't heard that before. It makes total sense too. It happens all the time, right? And that's a great. Okay, so that's a reasonable economic ask, I would say. Is there anything else on the list? I mean, there are really good questions coming in, Court. So maybe we could switch to questions. I have some more questions for you as well, but
that's fine.
All right. So, well, let me just go again. So now you talked to us about some of the ways that you select these new managers. Have you been in a position yet where you've gone through multiple funds with the manager? And maybe you can talk to me about your calculus from one fund to the next. Do you like give them a second shot, but maybe not a third, or how do you think about that?
So yeah, I have a couple managers in the portfolio that have come back for second funds, and I will say that in both cases, I have re-upped and re-upped with a bigger number in the second fund. Normally, generationally, the funds get larger. So there's, as is often the case, I will put a certain amount to work in the first fund and then wait to see how that performs. And then when they're back in the fundraising mode, assess again, how do they pick? How do they, what are those companies looking like right now? Have they had any exits? Have they had any follow-on investments? What do those look like? What are the things that they're doing that make them stand out amongst fund managers, if anything, right? So in terms of the way they're evaluating or engaging with companies. So yeah, I've had two of the managers in my package of funds that I'm invested in already come back, and I've in many cases doubled down, like put twice as much in the second fund as I put in the first fund, because I assessed that they had something unique.
But they didn't have cash on cash per se, or did some? So you were looking at markups and other things as part of that calculus?
No, I mean, second fund, they had warehouse deals. They had stuff they were getting into already. There's usually a catch up to be made if there has been some warehousing done, or let's see. Or if it's a newer, if it's a fund that needs capital to put to work right away, the entire committed amount might be called up front, right? Wow. So I'll enter with an upfront check as opposed to a capital call structure.
Okay, let's jump into some of these questions, because honestly, I have questions, but some of these questions are great. So, all right. Wes, number one. This is an interesting one. I'd love to hear your answer. LP value add. Okay. I'm like, well, I haven't heard that term before. So it opens with something is becoming somewhat commoditized. I'm like, really? I didn't know LPs have value add. But in today's venture landscape, what's the most important value add VCs can offer founders these days when differentiating themselves from other funds? So like, that's an interesting way. So I'd love to pick that apart. Like, how do you first, what do you see LP value add? And then second, what do you look for in VCs with respect to their value add?
Yeah, and I'm wondering if that question isn't the question of are venture capitalists as a class considered to be adding value to the companies in which they invest? That's actually how I interpret that question. And I think I would certainly upvote the concept that it has become a commoditized presentation to the founders, right? Oh, we're coming to you with this money, but we're such great people that we're gonna make a big impact in your company. That is yes, I would say that has been commoditized. To answer the question about how does a venture capitalist differentiate in the world of startups in order to win deals, like if there's a competitive deal on offer, okay, I see, that's how I meant it. All right, good. All right, I'm interpreting it correctly. So how does a VC differentiate? Okay. I think the thing that, look, as a founder, I'll tell you that the thing that made the most impact on me was when the VCs were willing to lean in more frequently and with more direct help than strictly attending board meetings, right? To the degree they offered their time, their resources, their personnel in critical moments when I needed things that they might have on offer, whether that would be recruiting help or access to somebody to help build out a new financial model, or person to sit down and ideate brand development or marketing campaign structures, or work me through a product roadmap modeling, or how to create value in the choices I'm making relative to the development of my platform. The more support I got there from the venture fund, and I'm talking about support not just in lip service, but in true, hey, I'm going to roll up my sleeves and come in and meet with you guys and spend hours talking about this stuff, and really you're going to walk away and feel good about it. So to the degree that you as managers can have your targets, in this case, because you're trying to sell yourself in a competitive landscape, talk to people that have had that experience with you, give them those referrals, let them hear how you've made a difference in those other companies' trajectories. That's a huge deal. And to any founder that doesn't understand the value of that, they're missing out, right? I would say those are the
Well, they may have never experienced it.
They may never have, but that is number one. The other one that I would say differentiates is whether or not you as a manager or your fund is there when times get tough, right? So again, I always think about in terms of most companies, as they statistically are not going to make it, or are going to scuffle and struggle and have all sorts of weird trajectory developments. Those are tough on the management. They're tough on the board members. And to the degree that you show up as a supporter and a help in those moments, rather than a, hey man, where are the numbers? We got to, I'm pounding you into the turf. That counts for a lot, right? And I'd say that again, referrals in that context help a founder feel good about making you their choice for investor.
What about, so I want to go the other side of it, which may have been a typo or a mistake, but LP value add. Mm-hmm. It's an interesting concept because, I think a lot of GPs are just like, money is money. When I got money, it's like, but money's not really money. There's the Saudis are going around with a lot of money. They actually came to us and were like, we want to give you lots of money. And we were like, we'll go through the process with them, not because we want to take their money, but we want to learn, right? And because they're very thorough. And so we went through like a thorough diligent process. And in the end, we didn't take their money, obviously. But so not all money is money. And so maybe bad money is kind of obvious, like criminal organizations, possibly the Saudis, whatever. What is good money? Like, what's a value added LP?
So for a startup, the most valuable people they can talk to are people that they can reflect as having been sitting in the chair that they currently occupy, right? So to the degree that there are opportunities to take LPs who are both willing to put money in your fund, but also willing to spend time with your companies, who have themselves been C-suite executives in startups, particularly. Like, it's different when you get a C-suite executive from Boeing or AT&T or whatever. I mean, these are valuable people, and I don't mean to diminish their experience whatsoever. But if that's where they made their wealth in order to be able to invest in your fund, they're going to have a very different perspective than somebody that's been a C-level executive at the phase of the company when it was starting, because that's where you're investing. You're investing at the starting phase of a company, and the experiences and decisions that those people have to make are vastly different than when that company is a middle or large size company. And the more people you can bring to bear, whether that be your partners or yourself or your LPs, to add that perspective at those critical moments of development, the better you're going to be. I think that's the most, in my experience, that has been the most valuable money.
That's awesome. Let's move on to well, there's a question from Paul about the venture studio model versus accelerator versus traditional VC, and I'd love to hear your thoughts on venture studios. They're popular. They've been performing well.
Well, I think the value of a venture studio, while it's a major investment in time and money, is that it gives the investor a much longer look at the team and the development of the concept and the market development than a classic investor has. I mean, imagine that you as an investor are going to have a chance to see a deal, and you might have a few weeks these days because of timing and competition to make an evaluative decision as to whether or not this is a good idea. A venture studio is going to have, a quarter, 12 weeks, 13 weeks, 14 weeks to consider that company, and they're going to lean in on the ones that look most promising. It's a reasonable model. I've definitely gotten investments in in venture studio models as well, like that, but also it's not required. I'd say it's just another way of going. It's also slower, right? So the opportunity to be active in the deals that are happening as quickly as they do. So it has pluses and minuses.
Okay, I like this one from Khaled. Hopefully I pronounced your name right. When it comes to allocating emerging GPs, do you consider the amount of deals the funds have already exposure to? And I'll broaden that question, not only just exposure to, but how many maybe they have in a warehouse or how many they've done in previous roles.
Yeah, usually what I'm looking for as an LP in evaluating a manager in this stage is, if they have any warehouse deals at all, what do those look like? I obviously want to look at them and talk and maybe talk to a couple of the founders to find out what they saw in this manager that drew them in. But also, what's the size of the fund they're planning and how they plan to allocate that. I get very worried if I see particularly a first-time manager saying they're going to raise a giant amount of money. That's usually a red flag for me that person doesn't really know how they need some time to learn how to get into this space and deploy, both raise and deploy capital. Too much money is a big red flag. I also look at the size of the partnership, how many, relative to the amount of capital being raised, to determine how many firms they can actually invest in or what they plan to invest, and how much time they're willing to spend on each investment. Because again, as a new manager, you are learning your craft as much as the company is trying to learn its trajectory. And I think the more time, there's a balance there that you need to have enough time to spend, as I say, back to what's the value add of being an investor at all. It's, can you spend an adequate and appropriate amount of time with each investment to nurture them in a proactive way, not either over nurturing and stifling them, or under allocating your time to them so that you're meeting them on a quarterly basis only at the board meetings. And so there's so if you're going to raise a $10 million fund and you want to put 250 to $500,000 in the first chunk, I expect you're not going to invest in more than 20 companies, right? So
Right.
if you think you're going to invest in 50 companies, I probably have a problem. And because that's just spreading yourself too thin.
I can't tell you how good that advice was. So everyone here, I just get the video of this, replay what he just said. But if I don't mind summarizing it, size of fund, too large is a red flag. And that relates to the size of the partnership, how many partners you have, and that ties to how many deals you can do. If you're doing 100 deals and it's one person, that's just, with a $50 million fund, that's as a first-time manager, unless you're like Mark Andreessen, that's pretty much not very realistic, right?
Non-starter, yeah.
Yeah. So and we try and at Court, I can't even now we're in cohort 4 and we're recruiting for cohort 5. There's still people that I think have fund sizes that are too large, and it's not uncommon to see graduates of VC Lab reduce their fund size after going through the whole program and us beating on them. So I thank you for making that point. Okay.
Absolutely.
Wes is asking, do you get involved in the portfolio companies of funds that you're an LP in?
Very active. Yeah. So that's a part of my ethos personally. Again, it's sort of how can I operate in a way that not only provides capital, but provides whatever layers of expertise I can offer to the portfolio companies in the moment that they might need it. So I'm always offering myself up to all of the funds that I participate in as a resource. And I'm extremely active in those funds in terms of when they call on me, I respond.
So there's a lot of questions, everyone's like, tell me more about what you care about when investing. So, Mark, Arturo are asking basically derivations of the same question, which is like, when you're evaluating, because they're like deal flow, network, help us to understand. So Arturo's asking, they're on their second fund. Are you interested in the figures or the network? And Mark's asking a similar question, experience, knowledge, network. So we have a pretty good list. You said team and people, picking, sector aligned. So maybe if you could unpack again.
Yeah. I also look at, again, personally, I look at geography, like where are you in the world? Do you have access to a deal flow that I'm not exposed to right now and that I want to be exposed to, right? So I have investments across Europe. I have investments in South America, Central and South America. So there are places that I haven't yet gotten exposure to. So that sometimes it's, what's the geography and what is your value add in that chain, and where do what's your deal flow look like relative to things that I might want exposure to? Because I'm very much, again, being a backer, a significant backer of VC Lab, the major premise there, of course, is that you all are out in the world. You are putting the capital to work in markets that are perhaps in many ways undercapitalized, underserved. That is, to me, one of the most important things we can do economically to grow the basket for everyone, is to put the capital out where the people and the entrepreneurs are, as opposed to pushing them all into 5 or 10 economic centers. I think that model is tapped out. So geography is definitely one of them. What else would I be looking for? Again, sector alignment, team development. I've already answered most of this question.
So it's people, of course, people are just like more, because they're all raising. So they're trying to figure out, probably not just you, but other LPs. So I like this question from Brandon. being invested in multiple funds, are there any funds out there that exceeded your expectations with regard to the platform, fund operations, reporting, deal tracking? And maybe you could share about, funds that have really wowed you and what they did to do that, both in the back office performance and all the above. I think it's an interesting question.
Yeah, I would say I am not as focused personally on what that question suggests, an intimate knowledge of back office operations of these various funds, which to me is less important than the way and the frequency in which I am informed of the progress. Okay, so as an LP, you guys are in the sausage factory making the sausage. I don't need to see how the sausage is made. What I need to see is the sausage in the packaging, and presented to me in a way that I can consume. So, to give an example, one of the best fund managers in my, sort of constellation of portfolios has a, monthly status letter that is organized, and they give me a quick overview on the things that they're excited about this month, things that they're looking at, or things that they've recently invested in. Then there is a quick, literally, it's a table of contents that is a highlighted, a hyperlinked table of contents to each of the companies that are currently active in the portfolio. And I can click on any one of those and dive deeper into the document quickly to see an update, a 1 or 2 paragraph update on that company this month, right? And that I can dive in as deep as I want, or I can just skim the first couple of paragraphs of the manager saying, here's what we're excited about. This is a couple of pieces of key points that you might be interested in. And then I can hang on to that and refer back to it later. But the fact that they are taking the time to keep me as an LP informed of their progress with documentation, and it doesn't have to be heavy, gives me a lot of confidence. Again, I don't know that necessarily denotes a better manager, but it definitely gives me as an LP more confidence in their ability to organize their thinking, organize their communication strategy, and keep their LPs involved in wanting to come back. And this, by the way, is one of the funds that has come back for more money, and I have put a lot more money in.
That's great. Well, so we do that with our select index funds.
Mm-hmm.
We send quarterly updates out, not monthly, and so I'd love to hear your thought, because for new managers, maybe monthly is tough, right?
I might be overstating that. It might be semi-monthly. I mean, or semi-quarterly. Sorry, semi-quarterly.
Yeah.
So it's probably six, on the half quarter. So I know it's not only 4 times a year. I think it's more like 8 times a year, because I feel there's enough motion in the ocean in terms of the deals they're looking at, new things that have happened, updates to existing portfolio companies that a 2-paragraph summary is meaningful.
Interesting. Another thing that we found, because we do that, I'd love just to discuss this because it's super great idea, super relevant to everybody here. There are companies that obviously have news, and then there's some companies that don't have news, but it doesn't mean they're dying or anything. There's just no news. So do they have, we literally will be like, there are no news on these companies. It's not bad, it's not good, it's just no news, right?
Yep.
So they do something like that as well?
That's why I tend to focus, again, just the discipline of doing it is important, but I think that the summary is where I get the bulk of my, updates, right? And then, and maybe if I've personally invested in a few of the companies on a direct basis inside the portfolio, I might click through to those specifically just to see if there's anything that's changed. But again, on the cadence of building a company, it's rare, not rare. You don't always have something new to report every 6 weeks, right? So that's fine.
Yeah, it's such a great point, though. Okay, I'm going to keep going with questions. There's a lot of great questions here, guys. Upvote, upvote, upvote. We have so many questions for Court. We'll try and get through them all, but if you upvote, we'll definitely get through the upvoted ones. All right, so I just upvoted one from Sushant, and now it's disappeared because someone else upvoted. Okay, how can a small VC compete with the 800-pound gorillas like Tiber Global that are out there? moving more money, moving earlier, and having a massive war chest. I'd love to hear your a good question,
Well,
but
yeah, you're first of all, you're competing for different deals. Let's be honest, right? Tiger Global and whether that's Tiger or any of the mega funds, they're trying. We talk back to size of fund, size of check, allocation, number of investments. Their fund is so large. If you measure funds in billions, you have to invest tens of millions in each deal. If you guys are measuring your fund in 10 millions, you're measuring in hundreds of thousands per deal. And what you're doing is you're trying to position yourself, not trying, but in the back of your mind, if you're good at your job and you're picking the right companies in their early life cycle phases and putting the hundreds of thousands to work when that's all the company is raising, then you set that company up for the potential to raise money when they need tens of millions of dollars from guys like Tiger, right? So if you think you're competing with Tiger, you're wrong. You're competing with the other folks who are also 10 and $20 million funds writing similar size checks to you, or maybe slightly bigger than you that might go down market. But the bigger the fund, the more money they have to put to work in each deal, because it doesn't make sense for an Andreessen Horowitz to invest $100,000 in anything. They can't make the numbers work. They don't have enough partners and time and energy to go around to compete with you at that size, right? So you're make sure you're focusing on the right, let's call them competitors, because those people won't show up in the deals you're going to do.
okay, so Almaz is asking kind of a basic question, like how much money do you usually trust first-time manager with? And yeah, so we covered the credentials. So like, did you write? I'd love to hear, is it percentage of fund? How do you think about the amount you put into a new manager?
Yeah, in some ways it's percentage of fund. I kind of go by feel. I'm often in the 300 to 500 range if I'm if I'm putting out real numbers. First time out, that kind of gives me a sense of what that person's likely to do over the life of investing in a manager. That'll go strongly into seven figures. So it's more a function of, all right, if I don't know this person's track record or whatever, I might come in at this level on fund one, and then I might double up on fund two or do more depending on that. And as I said, I'm often co-investing with them in a lot of their deals or some portion of their deals to help fill up rounds and give their picks more runway, right? So it's adding to the net of the portfolio by giving the fuel that company needs, from within the LP universe, as opposed to having to go syndicate that out to another party.
Kelly asked in the chat, and if everyone could put their questions in the Q&A, but I'll pull it out because I think it's some relevant and good. What do you think about investing in female managers these days? Given the fact that there are so few of them still in the world.
Huge emphasis for myself and my wife. We do so. We have a family foundation, and we have that my wife runs, and we have a for-profit entity that I run. And one of our prime thesis in both of those, as I talked about building long-term societal benefit, is deploying more than our fair share of capital to women and minority investors and managers who themselves are investing in women and minority-led businesses.
Right.
That for us personally, that's a major thesis of fund deployment.
That's awesome. Thank you for that. It's needed, by the way. So I'm going to read this one because it's the top voted question. How about a deal for new managers with DocuSign? I mean, just FYI, I run a company. We paid for DocuSign. It's not free, but
well, look at it this way. If your companies that you invest in gave their stuff away for free for everybody that asked, they'd never make any money, and neither would you. So
you don't have to give it, we could talk about that offline. We at VC Lab, we do a lot of deals for new managers with all sorts of things. I don't think we have DocuSign on that list, but we have all your back office providers, law firms, blah, blah, blah. And we generally have like 20+% savings on those. Lots of questions here. There's some interesting questions around domiciles. Like, do you have a preferred domicile? Almaz was asking a few others.
As a U.S. investor, yeah, all of my funds, I think. No, actually, I have two that are not domiciled in the U.S. As funds, that is. But I don't think it's so much preferred as it's just a vast majority of my fund managers happen to be domiciled in the U.S.
We're seeing it over 50%, all funds everywhere in the world domiciled in the US, because it's at this point right now, for everybody's benefit, we have a domicile report on our website. It's the fastest and cheapest domicile in the world by many orders of magnitude. It doesn't mean it's easy. There's tax issues, but compared to other places, it is easy. Just because it's like relative degrees of hard, I would say. Yeah. Wes is also asking about your thoughts on other geographies, in particular India. But if you have any like geographic interests that you want to share, I'd love to hear them.
Again, where I'm currently invested, I've already expressed, so Europe, Central, South America, and North America. I don't currently have anything in Asia, and I don't currently have anything inclusive of India, right? So that right now, those aren't areas that I have chosen to explore yet, but it doesn't mean that's a never. Right.
Okay. So, and that includes, so you're not really Africa, India, and Asia, and any, what was the other? Have you done anything in the Middle East?
No, not currently.
Yeah, well, I can show you a whole bunch of interesting funds in any of those areas if you're interested. Okay, this one from Joseph's interesting. We see a lot of startups with the Save the World mission. This was largely popular before 2000. Is giving back or Save the World mission still important to investors? I know it's important to you.
Yeah, but again, it all has to make economic sense, right? So I won't invest in a company or a founder if what they're doing doesn't pencil out economically, because again, everyone's in business, and business has to make money, and the Save the World thing is important, but it can't be the only vector you judge. You judge, and I see a lot of deals that don't pencil, right, and the vast majority of them do not, without the founder even understanding, do not pencil out as investments, because they don't understand how the forces are going to come into play in the later stages of their life cycle that will upend them or never allow them to be profitable as a business, or even sufficiently profitable to sustain themselves or make a reasonable investment return. So I think it's an element, right? Like a lot of things, you're going to look at, for me personally, it's a prime element that I use as a filter. So if you think about the universe of things that you're all looking at in terms of, God, I'm going to be overwhelmed and I can only invest in a small percentage, you have to be able to create certain filters that are important to you, whatever those are. For me, it's like, okay, if it's healthcare, yeah, I'm probably not going to be able to take some time. There's certain things that I know I'm just not going to be interested in or not going to follow up on. And, and even more specifically, I talked about B2B software. So my history is B2B software, and it often frustrates some people that they'll come to me with these awesome, this looks like DocuSign, this looks like such and such, and you should have, this should be a slam dunk for you to get into. I'm like, yeah, it looks really interesting. What's the play that makes, if this is successful, how does the world become a better place? Again, my filter. And I will walk away from deals that are maybe obvious money makers that you'd leave your head scratching, like, why on earth did he pass on that deal? That's such an obvious play. That's going to be the next Amazon, right? Because I objectively believe that there's a lot of that raising money for obvious wins is easier than raising money for less obvious wins that might have a more societal benefit downstream. So I'm willing personally to take more risk in my deals if I believe in the founder, the team, the mission, and the long-term benefit over strict financial return. So again, this is me, and it helps me to narrow the universe from millions of opportunities down to a manageable number that I can get my head around and make reasonable investment decisions. That's not to say that other people aren't going to have their own kinds of filters like that, but that's mine.
We're in complete alignment. You know, you couldn't have said it better, and we're in complete agreement on this as well. And by the way, I don't think it's mutually exclusive. It's not like, oh, they're not going to make money because they want to make the world better. There are lots of businesses that can make lots of money making the world better. Tesla is an example. It's definitely making the world better, 100%, and it's made an astronomical amount of money.
Yeah.
You know, I think it might even be one of the top returning companies in history right now. You know, certainly up there. All right. Lots of questions. Oh boy. Upvote, guys. Help me help you. So top 3 do's and don'ts or don'ts for, I was going to say do's and don'ts, but then I said it actually says don'ts because that's what I was going to ask. Like, what are 3 things a new manager should not do in your opinion? And like, if you see them do it, you're like, this is a no-no.
We already covered size of fund, you know, tell me that you're raising $100 million as your first fund, and I'm not going to keep listening.
Yeah.
Tell me that you're well,
size of fund, size of partnership, and size of investment pool or portfolio. Yeah, we covered.
Yeah, those are all relative. I would say, you know, solo practitioners, I think that's tough sledding, right? I think you need other people in your universe to help bounce things around. So I like to see more than one decision-making partner if that's possible, but that's not a, you know, again, that's not a
it's not a hard, yeah. Okay.
It's not a hard, I guess. So I shouldn't put that in a pure don't. What would that be? That's just a flag.
Yeah, warning sign.
That's a warning flag. Someone that is coming, again, you see, these are all personal. To me, I think the question is much more generic than I probably could be able to answer it routinely.
Well, tell me a couple personal ones that if you saw like would be good. You know, just because I think to your point, every LP is different, guys. And that's something that I hope is coming out of this, because with your interests, your interest in female GPs, all this stuff, like some people have mandates for female GPs, some people prefer not to invest in female. So everything's kind of down to the person, but tell us a few things that you see as like hard red flags, if you want to share.
Yeah, again, this should not be taken as generic. This is me personally. If I see a fund manager and partnership that are all what I call, their background is all strictly financial investment, meaning they are what I call spreadsheet investors. They dive in like private equity. They've either come out of PE, or they've, you know, that's their discipline, or they've come out of Wall Street in terms of their analytics, and it's just a, you know, and I say just because I have tremendous respect for these people, a group of, you know, MBAs with great credentials, and there's nobody on the team that's been a founder.
Yeah.
That's one that for me is a non-starter. I don't believe that maybe that's going to be wildly successful, but it's just not one I'm going to bet on. Let's just say. So I believe having founders in the partnership brings a much needed, if not absolutely essential, view to not only how to pick, but how to govern and manage those companies through their life cycle.
Okay, let's go. There's this, I like this question. Given your comments on Tiger Global, which admittedly I agree with you, are not competitive with many. Mark is asking, what about these mega seed funds that are kind of like definitely more competitive? Like there's 400 million, 600 million, 500 million. I think anyway, they're coming out left and right. And so any comments on that?
I think that is a byproduct of the fact that there's so much money sloshing around in the system that is looking to find returns, that it's a pyramid, right? You've got a large number of dollars spread across a huge number of funds in the seed stage capacity. And the farther you go up the pyramid, you might have the same number of dollars to work, but much fewer players putting those dollars to work, right? So you've got the SoftBanks and the Tigers at the top of the pyramid, and the Andreessens and the Sequoias, but that's a tiny number relative to, but if you took all the capital that is being managed by folks like you that are maybe first-time managers in the aggregate, it's a giant number. So now if somebody comes in and says, look, I'm going to bring a seed fund into the universe down at the bottom of that pyramid, I'm going to try and put a lot of money and collapse it into one entity. I go back to the fundamental problem I mentioned earlier. The size of the fund is too big relative to the number of partners that can deploy that fund in some level of reasonable manner. Now, I have seen funds and I've been invited into funds that I personally have passed on, where they're saying, look, our thesis is we are going to invest a little in a lot of companies, right? We're going to invest, a small number, but we're going to invest in hundreds of companies because we are playing the statistical success game, that if we spread it out like peanut butter across a large number, we're going to find some winners in there inherently, and then we'll only, refund the ones that are the winners. And honestly, you could say that's the same strategy even if you only had 20, but that is not a fund that attracts me personally. That one to me, I think, isn't using any kind of disciplined, it's a different kind of disciplined investing, but it's not one that attracts me, let's just say.
So we've gone to time here, and I want to give you, and so we should do this again. This was we had a great turnout. Everyone stayed for almost all, we were full the entire time. Do you have any final thoughts that you want to share with the various new managers here who are either, I know some of them have started their journey and others are about to start their journey into venture capital?
Yeah, I want to say that if you're here doing this VC Lab thing, you're doing the right thing. I have a strong belief, as I said earlier, that we need to put the capital where the talent is and not bring the talent to the capital. And that requires you guys to do whatever you're doing in the markets that you live in and serve, and finding the entrepreneurs in your community and keeping them home. Don't move them to Silicon Valley. Don't move them to Seattle. Don't move them to New York. Keep them where they are. Build your economy where it is. I'm a huge fan of that. It's why I'm back to Adeo and VC Lab. This needs to happen in the world. I thank you for the work you're doing.
Thank you so much, Court. I have goosebumps. That was awesome. You have a lovely day, and I hope to talk to you very soon.
My pleasure. Thanks, guys.
Bye, everyone.